Unemployment claims continue to rise just as COVID-19 hospitalizations and deaths lead several states to clamp down on public life. 778,000 Americans filed for unemployment for the first time last week. This comes as the new surge in coronavirus cases continue to disrupt the U.S. economy. It was the second week in a row the claims rose, climbing 30,000 from the week before. For more on this, let's bring in Frances Stacy. She is the Director of Portfolio Strategy at Optimal Capital. Frances, we are now 9 months into the coronavirus pandemic, and still an additional 778,000 Americans filed for first-time unemployment last week. What do these numbers tell us about the state of the economy?
Well, the poor are getting poorer and the rich are getting richer. That's been the story for, pretty much since the bottom of the market in 2009. But the pandemic has, of course, uncovered that and exacerbated that. This is 6 weeks in a row that it's been below 800,000, which is okay, except that, as you say, it's much, much, much higher than it ever has been before. And those people are going to suffer and probably not have a great holiday season, particularly with the unemployment benefits and the additional unemployment benefits, the additional 13 weeks expiring at the end of this year.
So the surge in the number of coronavirus cases each day is forcing some states to implement stricter restrictions to help mitigate the spikes. If we go into another shutdown, what are the potential impacts to the economy?
Well, we're going to see more layoffs, more job losses that are going to become permanent job losses from temporary job losses. And we're going to probably see small businesses that were sort of on the brink, that were just hanging in there, that have, expired their PPP funds, et cetera. Probably will lose some more small businesses. They'll just give up, unfortunately. So it's always weighing, is it great to shut down the economy, to eradicate the virus? Or in the end, do you lose more by losing the small businesses, which the plethora of uptick in jobs that gave us the record unemployment level before the pandemic was, came from small business employment. So when we look at recovering moving forward in the labor markets, not having small businesses participate in that is going to make it take longer. But again, you just have to weigh these things, and we're not going to know the right answer probably for some time, which makes it even harder. So we just have to do the best that we can going forward, and places where people are particularly vulnerable, pay attention to the virus. If for some reason there's a place where, the demography is a little bit better, pay attention to the economy. It's sad that statistically we won't know how many small businesses are on the brink and how many we can lose. So we just really cannot make a statistical calculation. We just have to go forward with common sense on this.
Turning to Washington, Americans across the country, as you know, are still anticipating another badly needed stimulus package. So if the Senate's unable to come to terms on another deal, what are the potential long-term damages to the economy?
Well, first, you've got the two sides of the economy. You've got the lower 60% and the upper 40%. For the upper 40%, the damages is that eventually we've had a record amount of liquidity put into the system, which is leading toward inflationary sort of projections. But eventually, the debt service is going to wane on that liquidity. So if you don't keep filling the swimming pool as it's draining, then eventually we're going to reach some kind of a liquidity error, and that's going to hurt credit markets. It's going to hurt markets going forward if we don't get more fiscal stimulus. When is the drop dead on that? Very, very hard to tell. For the lower 60%, of course, you have the eviction moratorium expiring at the end of the year. You have people coming off of the extra 13 weeks of emergency unemployment benefits. You have gig worker programs expiring. You have such an upsurge, actually, this week in people getting on to that additional 13 weeks. That went up by over 400,000. You have 9.15 million on that program that are going to lose their benefits at the end of the month. So you just have people that are going to lose their benefits. And if they have maybe been able to pay their rent, maybe they won't be able to pay their rent. If they could have maybe paid their mortgage with those benefits and they're unable to pay their mortgage, you just have so many of these protections for this lower 60% coming to a halt at the same time. So we're going to see people lose their homes, sadly.
So, as you know, Frances, stocks jumped worldwide after signs that the uncertainty of the U.S. presidential election may be ending. The president-elect will still be inheriting a severely damaged U.S. economy. If that's the case, why are stocks still so high? Some of the people that I spoke to yesterday seem to be encouraged by the potential nomination of Janet Yellen to be Treasury Secretary. What are you hearing?
I think that's just baking in coordination, and I think it's baking in stimulus, because Janet Yellen is going to have an innate understanding of how we need to coordinate with the Treasury to get additional fiscal stimulus. Because the thing is that monetary stimulus and monetary policy and the purview of the Fed is, Jerome Powell said many times, we're a lender. We can't just give stimulus checks to those who are really hurting, and we can't just provide things to people who you cannot underwrite. Because, of course, the whole mechanism of lending is the underwriting process. So I think there's a lot of coordination. I think it presumes more fiscal stimulus, and I think markets are counting on that continuing liquidity. I also think that yields, are still pretty tepid, even though they're kind of, earmarked to go up next year. And I think that people are chasing the returns in the stock market. But I do think that we're going to see a rotation out of this country, out of U.S. equities, out of U.S. treasuries, into, areas that have opportunities for growth because they recovered from the virus faster. They've been in the rollover of their business cycle a year longer, with, like Europe or Japan, some parts of Asia. They have less debt loads in some cases. So I just think that we're going to see this sort of boil up of the U.S. stuff kind of, flatten out as Joe Biden is really contending with the fallout from the virus, which I think is going to be pretty long.
Indeed. Frances, Stacy, always great to have you. Happy Thanksgiving to you and yours. We'll see you after the holiday.
Thanks, Vlad. Happy Thanksgiving.
We're going to take a quick break, which means it's a good